Let us not lose sight of the fundamentals, advises First Majestic, even though silver has had a solid rally. There are 7 times as many silver mines as gold mines, according to the silver to gold mine supply ratio. Currently, for every ounce of gold that is extracted from the earth, 7 ounces of silver is being extracted as well, with the gold-silver ratio trading at 85 to 1. Since we can only extract 7 ounces of silver for every ounce of gold, the price of silver is 1/8 of that of gold, or 85 ounces of silver are required to produce 1 ounce of gold. After that, the most majority of the gold, about 95%, is either stored in vaults or shown above ground in various forms of jewelry or bars. Unfortunately, the majority of the silver, roughly 2/3 of those 7 ounces, is consumed by industry and then discarded. For that reason, it is far more biased than what he claims. It's still early. This is the correct method for valuing silver, it argues. I need to know the value in gold ounces. By following these steps, you will discover that silver is really affordable, even at $46. It is incredibly underappreciated. That is a breakdown of the gold to silver ratio, according to Happy Hawaiian. Here, we may see a chart of the gold-silver ratio spanning 3 months. It was previously mentioned that it was at 83 or 85. Currently, it's hovering about 81 degrees, while I record this video. This is, however, the preceding 3 months. This megaphone design doesn't really match up with these candles very well, so I'm not sure what he's trying to say. However, the breakdown he mentions is this. Here, let's take a step back and see the big picture. 3 months have passed. So, let's not rush things and instead figure out what we're doing. On my website, goldsilver.com, you may get a chart that spans 3 months. This is the collapse he is referring to. The final result was 81.53. What follows is an explanation of the 3 months of ratio activity. However, that period lasts for 3 months. Here we may get all data, which will transport us to either January 1995 or 1994. The average is incredibly low, hovering around 60 or lower, as you can see above. And now we're descending from this 100-point summit. While COVID was in full swing, the temperature reached 120 degrees. The data is updated monthly. This is the monthly average then. This isn't daily data. It might be the end of the month, but it's not. This went over 120 if you could see it. This dropped to 30 if the data was available on a monthly or daily basis. Therefore, if someone were to purchase silver now at 81 cents and the ratio were to fall to 20, it would be 14 in 1980, when the price of gold and silver reached their pinnacle. I really do anticipate 20 if it drops to that level, which is where I think it will blast right through. By the time I'm 20, I intend to have begun the process of turning part of my silver into gold. However, I anticipate this occasion. Large quantities of government-issued goods were on hand in 1980. On the commodities trade, we did not experience shortages. Not only was there gold and silver on the commodities trade, but there were also global stocks. We aren't wasting more silver and running out of it year after year because of a structural deficit. Afterwards, we will be mining in order to drastically reduce the stockpiles. The levels of expenditure on deficits were not met. An impending currency crisis never materialized. In my opinion, yes. Consequently, the silver price won't be driven by the impending crisis, as investors pour more and more money into the precious metal. As it reaches new heights and receives increasing coverage in the media, mainstream analysts and corporations like TD Securities and Morgan Stanley are starting to talk about it. which is something they weren't doing before. This will fall as soon as all of that happens and silver becomes a popular investment. Although I do believe that $5,000 is the bare minimum for gold, I find it to be completely ridiculous. In my opinion, $10,000 gold is on the horizon. At a ratio of 20 to 1, that amounts to $500 worth of silver. Also, no one really believed that a gold to silver ratio of 14 was possible. The gold-silver ratio is now at an extreme bargain of 80 to 1. But when the bull market of the 1980s and 1970s began, it was averaging around 30. If you invest $80 and then convert it to gold for $40, you will receive twice the amount of gold that you first invested. By the time it reaches 20, you will have received 4 times the amount of gold that you initially paid for. Additionally, if it reaches 10 and you decide to convert, you will receive 8 times the amount of gold that you first paid for. Now is not the time to purchase gold, is it? I mean, I just let this decide what I need to purchase. Because of this, I was able to convert my gold holdings into 300 ounces of silver. I decided I wouldn't be purchasing any silver when it dropped below $50. There, I solely purchased gold. However, I used to buy things every month. When it rose above 70 or 80, I made sure to purchase silver exclusively. That is how I came to possess a substantial amount of silver. I recently collaborated with Alan on a film that demonstrates the potential financial rewards of investing in precious metals. It is highly recommended that you watch this if you have not already. According to the views, though, I think most of you already have. However, that part warrants examination. My book's final chart was revised by us. Greetings, this is Mike. This is a brief message. I just wanted to say thanks to everyone who has seen our films, but I did want to mention that only about 15% of people who have watched our videos have really subscribed and enabled notifications. Some difficult times are ahead of us. So, turn on notifications if you don't wish to miss a thing. Also, I appreciate you constantly giving me the thumbs up. And finally, we have been offering high-quality instructional content at goldsilver.com for more than 20 years. It would be our privilege to serve as your precious metals dealer if you are interested in supporting our goal. Result? Victory. Bonus silver worth up to $2,000 is available right now when you place an order with us. Visit goldsilver.com at the URL provided. Please return to the video after I thank you. Valuable to examine within. On this line, you may see the revised final chart from my book, which includes the publication date. The sum of all these unallocated funds, including demand deposits, market funds, and credit card lines, had grown from $16 trillion to more than $20 trillion. This is money that can be chased after for gold and silver in a day. The purchase of precious metals like gold and silver is one scenario. That, however, is limited to the USA. Gold and silver reserves, as well as those with the financial means to purchase them. This extends beyond the borders of the US. Therefore, we must not be overly focused on the United States, and instead consider the entire world. It was our video and this chart that prompted PM Bug to comment, predicting that over $20 trillion may chase it. He estimated that 1% of $20 trillion, which is a conservative estimate, would amount to $200 billion, around 138,237.7 metric tons of silver, or 4.444 billion troy ounces, would be equivalent to $200 billion at a price of $45 per troy ounce. Global free float vault stock plus mine production isn't producing enough liquid free float to meet that level of demand. Possibly at 145, but definitely not at 45. However, the US accounts for all $20 trillion. This chart was shown by Alan in that very video. Thus, this is widespread. So, if you're interested in the measurement of currency, it went from $7.5 trillion in the book to approximately $10 trillion in the US. However, that figure jumps to $80 trillion when you include every single currency in the world. Morgan Stanley recommends a 60-20-20 strategy, which entails selling half of your $125 trillion in stocks and $145 trillion in bonds, and putting the other half into gold. Whatever the case may be, adding all of the above amounts to $350 trillion. Accordingly, $3.5 trillion, not $200 billion, is 1% of it. This is therefore a very other ballgame. Given the impending precious metals bonanza, $10,000 for a trowel is practically peanuts. $5,000 is ridiculous, but I did say that before. That is completely off the table. With a $10,000 gold minimum, your fate is sealed. Now, if the price of gold were to rise, the world's currencies could be saved by creating a new global monetary system pegged to gold, and the inflation would come to a halt. After a huge surge, silver will likely recover. However, silver will continue to provide you with enormous leverage. Even without considering the new allocation of 20% bonds, 20% precious metals, and 60% stocks, which would necessitate selling half of the bonds, a 1% stake in each of these would amount to $3.5 trillion. This is a devastating deluge. This chart from 2002 and 2003 shows the beginning of my silver buying journey. In October, I began purchasing gold. When I made my initial buy, the spot price was $315 per ounce. In April, I bought an ounce of silver for around $4.38, and then I bought another ounce for about $4.50. The coin stores were deserted when the price was $4.50. A couple hours passed with no one else in the place save me. I was the sole observer. Thus, it appeared somewhat like this. Even at $4.50, no one showed up. If you add today's decimal point to $4.50, you'll see a trickle. It's just a little group. I was not dealing in precious metals at that time. I was just beginning out as a buyer and investment. The amount of sales is a mere trickle, and now that I'm a precious metals dealer, I know this. To make matters worse, the news is relentlessly covering silver stories, so let's shift the decimal point one more time. Eventually, they'll start hearing about silver every single day. In addition, a large influx of customers is necessary for this super spike to take place. Normally, silver is used in industry, but every so often it becomes the go-to investment for those seeking security. It turns into cash again. Preserving your purchasing power and wealth is a demand in the monetary market. Therefore, how does the government and the commodities exchange keep this under control? What measures are taken to ensure that this does not occur? To be more specific, they increase margin requirements. They lost control after doing this multiple times between the late 1970s and the 1st January of 1980. Beginning with escalating and continuously shifting margin requirements, they may move on to position limitations, and lastly, silver-only liquidation orders. This was sent to me by Nick Laird of Gold Charts RS. Gold margins are increased by 6.3% and silver margins by 6.7% by the CME. What happens next when margin requirements are raised? We are discussing this in relation to futures. Consequently, the commodities exchange is dealing in paper, silver, gold, and futures contracts for commodities that do not exist. They simply invent it, and it's heavily influenced. Accordingly, for every actual ounce of marketable silver in the vaults, there may be over 300 ounces of paper silver floating around. If you're already heavily leveraged, you'll need to find the extra 6.7% cash or sell off a significant portion of your investment to meet their requirements. Thus, similar to their previous attempt, they will be unable to maintain control this time around. It detonated in the latter half of 1979 or the beginning of 1980, the last time they couldn't keep it under control. All right, here is the market for commodities. COMEX is attempting to drive down the price of silver, according to Bald Guy Money. Thus, we go. Again, this is it. Your presence here is greatly appreciated. Up next, we'll meet again. Bonus silver worth up to $2,000 is available at goldsilver.com. No sweat. First, create an account for gold silver storage. Not an IRA though. The second step is to buy the precious metals. Third, have some extra silver, up to $2,000, deposited into your vault. Go to goldsilver.com and get your hands on some free silver. This was transcribed using turboscribe.ai. Remove this message by subscribing to Unlimited.